Good morning. Welcome to Forex In Four. Today is Tuesday, September 13th, 2011. You go away to Vegas for one weekend and all heck breaks loose. I've been at the FXCM Currency Expo last week, just got in last night, and boy, we had a lot of exciting stuff to talk about at that expo, let me tell you. So we had a great time out there, but let's just dive right into what's happening here so we can't, there's no more pittering around. But Euro, we can see Euro obviously has been selling off here. All right, we're looking at it right now. It's sitting up just about 136.50 area, all right, above the daily pivot, and just bouncing off of that S1 support area. Now, we know about all the problems going on there. I mean, right now the European banks are under fire. All right, the market believes that they have great exposure to a lot of this sovereign debt. All right. Speaking of sovereign debt, Greece, I think the odds that Greece is going to default are now up to something like 98%, is what the bond market's telling us. So there's perhaps a Greek default imminent. We have Italy. The euro actually bounced yesterday on the news that Italy met with China, hoping to get China Investment Corp to start buying their bonds. Now they had an auction there where they were able to get the auction off, but the yields were coming out higher. There's some speculation that the ECB participated in it, but bottom line is interest rates are going up. Italy and Spain, and it's going to get to a point now where everybody's going to start demanding, a whole lot more interest out of everybody except for Germany, and this is going to be unsustainable. So they better come up with something on this very quickly, or this is going to begin to spiral out of control even worse than it has been. Because last Friday was a day when things just really looked like it was going to hit the fan, and we've reflected here in the price of euro, breaking down finally that 140 area of resistance, or I'm sorry, of support, which had been holding in there for some time. Okay, and now we are squarely below it. And we had what was the makings of a bear flag here, which looks like it's completed right around 135.50. So that's what we're looking at with the euro. Let's look at the pound here real quick, or that's the Kiwi, but it's selling off a little bit on risk-off trade. Although we're flat on the markets today. Yesterday, markets were down significantly, but U.S. stocks were able to rebound, which pulled it back for the markets here. So we're looking at pound here, though. They had a slew of information that came out today. And it came out with their CPI data, which came in a little bit hotter than expected. All right, it was 3.1% versus 3% for the core CPI. We know prices are going up in the UK, all right, but there's still questions over the conviction of whether or not they're going to do anything about interest rates at the B of E, and most likely not. Okay, the next move is most likely going to be a lowering of interest rates or an increase of quantitative easing, and not any sort of tightening with the economic conditions going on there. All right, what else can we look at here? Let's look at dollar yen here. See, dollar yen broke down that 77 area, and we're going back down towards the lows prior to when they did the intervention back here. So we're hitting up just above that S1 support on the daily pivots. So that's about 76 and 76.75, and we're probably going to idle and go back and forth around this pivot area, depending upon whether we're on risk on or risk off mode. But I got to tell you, I'm not really certain what at this point is going to bring any significant risk on sort of trades, but I think people are going to start nibbling here at the door until we can really get some answers out of Europe as to how this thing is going to be fixed. And so what'd they do? They sent Timothy Geithner over there to fix the problem, because he's so good at fixing problems over here in the U.S. And speaking of problems here in the U.S., just starting to get the details of the president's jobs plan, Jobs for America, and frankly, I just couldn't be more disappointed. It's just politics as usual with this guy. All right, let's spend some more, let's raise some taxes, and that's the program. And we've already gone through this once with the debt ceiling debate, and at the end of the day, he's just trying to frame this as a political argument for 2012, when he's going to say, I tried to fix these things, but it was them who blocked it with their ideology about not allowing taxes on corporate jet owners to go higher. All right, that's going to be the argument. We may as well have the election tomorrow, because I don't know that America can wait till 2012 to allow this to play out. But this guy continues to spend money this country doesn't have, all right, or attempting to. All right, he continues to blame the wealthy, the job creators, and then he thinks that somehow they're going to turn around, all right, accept his tax, and somehow they're going to start hiring people. This makes no sense. All right, the government's going to hire people with these shovel-ready projects? What are they? Give me a couple. Jesus. So it's looking ugly here in the U.S. is the bottom line as well. So a lot of things going on that we have to keep an eye on. But right now, obviously, all the risk is coming out of the eurozone. I'll just show you gold here real quick. Gold is actually sold off a little bit on dollar strength. You can see here we had a little spike down under 1800 just to that S1 support, but we're back up to 18 and a quarter. And my guess is we're going to trade the range as we move in and out of different risk taking and risk averting modes. So that's what we're looking at today, folks. We got the U.S. market's going to open up. It looks like flat to just a little bit lower, and we're going to see if there's we can make heads or tails out of this today. So good trading to all.